What's up everyone, it's Karthik with MoneyVest. Welcome on board for our Market Open live stream. So we got lots going on in this pre-market update. We also have Tesla delivery numbers coming out in I think just a couple minutes here. And the forecast right now is for 386,000 for analyst consensus expectations. ADP numbers came out with a decline of 33,000 in the month of June. And so we are seeing way below consensus here in terms of how many jobs were added in the month of June. Consensus was 103,000. We got 33,000 negative number. And the JOLTS numbers, of course, came out yesterday at 7.76 million job openings in the US, which was way higher than compared to the consensus expectations as well. So if you guys can see me and hear me, just give me a thumbs up. I just want to make sure that the audio and the video is working well. My chat is not working, but yes, just give me a thumbs up, and I just want to make sure the audio and the video is working well. So just again in the chat, let me know if everything is good, and we're waiting for the markets to open in about 30 minutes, of course, but I guess Tesla delivery numbers are going to be coming out any second now. So we'll be bringing those over to you as soon as they are released. And NVIDIA here dropping over 1%. We're back in the 150s now, 151, 55. SoFi 1750, so also down about 1% here. Then we've got HIMS, which is also slightly lower, a little bit under $48. And Palantir also continuing on its slide lower. The bears are indeed here in this market. So volatility here up over 3%, 17.36. is where we are on the VIX. And of course, the MoneyVest Index, as we discussed in our yesterday's market update, we are at 3.91, which is optimistic level and very close to greed. In fact, the highest level that we've seen in all of 2025. So that's where we are for the MoneyVest Index, volatility, of course, and the markets overall as well. Perfect. All good, great. Wow, there's these new tags that are pretty cool that YouTube has added.
Carl enjoying a well-deserved day off. Oh yeah. Yes, as we all deserve them as well. Take a look at futures. I don't know, what's that say to you? Anything? Anything at all?
You know, we have a whole show to do.
Yeah, we got a whole show. Exactly. That's what it says to me as well. Thanks, Jim. Our roadmap does begin with a pause for the big tech run-up. This after a surge of more than 20% over the last 3 months. The NASDAQ did notch its first decline in 6 sessions.
Okay, so what I'm getting from X right now, right on the update, is 384,000 deliveries for Tesla versus expectations of 389,000. So they just came out with the numbers, delivery numbers. You can see the Tesla pop here, up over 4%, 384,122 is that number, which again is a little bit lower, slightly lower than what the consensus expectations were. However, this is still on a perspective basis actually quite good because we were not expecting numbers to be this high. So 384,122 is the number. Now we are still seeing a decline on a year-over-year basis. So I believe that decline at 384 divided by 444, we're looking at a decline of about 10 to 12%. I think is going to be that year-over-year number. But yes, the numbers are out. Second quarter delivery numbers 384,122. Of course, missing a little bit on those expectations, but the stock here popping higher over 4% on this news. So very, very nice breakout.
No, all right. What's it all mean?
It was marked up. I mean,
yes.
That's what went to 158. Remember, this is just who finished at the high. I'm trying to distinguish between the companies that came in hot and then faltered, and the companies that really delivered. And look, and I think the ones that delivered, David, very interesting. Meta turned out to be cheap, as you knew. And Microsoft, where they're thinking about laying off as many as 9,000 employees in the latest round. Microsoft may be the company that uses AI the most. Or they might just say, you know what, we finished this Xbox acquisition. Why do we need it? we are seeing, David, AI.
But you mean the
being used in
Activision,
companies.
the Activision, not
The
Xbox.
Activision.
Yeah, you said Xbox.
Well, Activision. Well,
Yeah.
look, I think
Different.
well, that's not Xbox, but I do feel that there's been two waves of layoffs, May and June. They're firing employees. Now, they're firing employees and they're making them.
All right, so here are the numbers. Deliveries coming in 384,122. The production numbers were 410,244. So Model 3 and Model Y numbers coming in at 396,835. Other models coming in at 13,409. So that was the production numbers, and deliveries coming in at 373,728 for the Model 3 and Model Y, and other models coming in at 10,394. Tesla will post its financial results in the second quarter of 2025 after markets close on July 23rd. So we are now, once again, just under 3 weeks away from the Tesla's second quarter financial results. And this still puts us on somewhat reasonable path to getting up to 1.7, 1.8 million for the year, which is going to be basically a flat year. And there's been a lot of speculation that this is going to be a little bit of a write-off year for Tesla, given that we are going through a lot of turbulence and, of course, a lot of volatility and a lot of uncertainty with regards to now, even with the Trump tariffs and the subsidies that are going to get cut off on Tesla as well. So those are some things to consider. However, Tesla here rallying quite a bit. It's up over 7% right now pre-market. So absolutely incredible move in this pre-market run up, back over $322 on Tesla. And TSLL puts are going to absolutely print today. It's back over $12, up over 14% right now. So we're back up to almost $12 per share. So incredible rally here on Tesla is what we're seeing at the moment. So I hope you all are doing great, everybody. Tesla delivery numbers just came out. Again, it was a little bit slightly lower than where the expectations were, but at the same time, we're getting numbers to be not as bad as what many people were expecting. I think the Whisper number and, of course, a lot of other expectations were pegged around 350, 360, 370. So 384 is still a very, very strong number, despite, of course, coming in year over year, they were a little bit lower. So if you look at Tesla Q2 2024 deliveries, if you look at that number, we were looking at 444,000. So this came out 386,000 delivers, down about 13% from 444,000 delivered in the second quarter of 2024. So those were the numbers. This was the number reported, 443,956. This was second quarter 2024. And we're seeing a decline, of course, of about 10 to 12%, as I mentioned earlier. 384,122 is the number. But nonetheless, I mean, Tesla here pushing up over 5%, back up to 316. NVIDIA getting a little bit of a boost. 152 right now is where it's at. And SoFi trading back up to 1750 at the moment. We'll see where the portfolio is going to be sitting. It's now positive. After the Tesla rally, it was actually negative, but now you can see this number fluctuate quite rapidly. This is the P&L for the day for the portfolio. You can see it's now back over $2,100 on the day, and year-to-date gain sitting at just shy of $60,000. And I'm going to be closing out my NVIDIA calls. So if I bring this over, you'll notice I've got NVIDIA calls expiring for this Friday. I've sold 2 at the 155 strike. Now, these ones were up 40-50% yesterday as NVIDIA was kind of hovering around 152, 153. And these are literally opened yesterday. So I opened them yesterday for this Friday. Friday is a holiday. Thursday markets are going to close early at 1 p.m. in observance of 4th of July. So I'm going to be closing these out pretty much today or tomorrow. And then I also have the TSLL puts that are most likely going to jump as soon as the markets open, because we're now back out of the money from $11. That in the money went away. So pretty excited about that. And of course, SoFi calls also printing. It's up over $357 right now because we are nowhere near close to $19. We saw SoFi pretty much get sold off. And as a result, this position is also green. And of course, I've got the HIMS position. I've got puts and calls. So on these, I've got sold puts and sold calls. So kind of like a short straddle on HIMS as well. So that's where we are with the portfolio. So Yeah, that's where we are. Pretty strong numbers coming in my opinion, I think, for Tesla. And we are back at 317, 318. And let me just go over some comments here. So Vault says, Mike says, and here I thought you were going live until tomorrow. Good morning. Yes, going live today, of course, for Tesla's numbers. That's also important. And we'll go live again tomorrow for the unemployment numbers as well. By the way, they actually came in not that great. So ADP numbers coming in negative 33,000. JOLTS did increase. So that again, just goes to show that, okay, there are job openings out there. Companies are still hiring. But we'll see what non-farm payrolls look like in tomorrow's report. Vault, Cadia, we're due for a correction pullback 5 to 10% because of looming tariff deals deadline. Also, Fed cut, no cut decisions by July, maybe more. So I think given that volatility is low, down in the 17s, and the Money West Index is back almost at greed and its highest level in 2025, I think we can pretty much say that, okay, risk reward is not great. But are we due for a 5 to 10% pullback or correction? I mean, that's always a coin flip. That's always a prediction, which nobody really knows at the end of the day. And that's one of the things that I try to hammer, every time I'm recording videos or I'm talking about the markets, is nobody in the world, doesn't matter who it is, doesn't matter where you're watching them, whether it's CNBC or YouTube or anywhere in the world, nobody knows where the markets are going to go, right? Nobody. And so I would be pretty foolish to try to predict the markets and tell you, 5% pullback, that's going to happen. We're overdue, because I don't know. My guess is going to be just as good as yours. So what we instead try to focus on is risk and reward, right? And that's why there is no certainties and there are no guarantees and there's no preciseness in that level of analysis, because the best investors know that they don't know, and that's what separates them from the crowd. And that's why you'll never see Peter Lynch or Warren Buffett or some of the greatest investors of our time come on CNBC and try to predict what interest rates are going to do, or try to predict where the markets are going to go, or try to predict where the economy is going to go, because nobody knows. And the best in this game know that they don't know. And so what they try to do instead is look at the risk reward. Okay, is it favorable? Is it unfavorable? Am I getting a good deal? Is this an opportunity? Am I paying 50 cents for a dollar? That's where the opportunity is, right? So that's what they do. And then they essentially hold. And that's what investing ends up being, right? Investing, most of the gains are made in holding, not in buying, not in selling, but in holding. And so that's, I think it's really important. So what I can tell you right now, of course, risk reward, not favorable. Money West Index is high. Volatility is low. Markets at an all-time high. We're overbought and overstretched. Now, that doesn't mean that we're going to see a pullback, right? Markets can very well continue on this upward trajectory. We can continue on this rally. We can continue on this momentum. But yes, eventually, as markets move in cycles, there is going to be a time where the opportunities will present themselves again. The risk reward will start to get good and great and better again. And that's when we start to aggressively invest in dollar cost average once again. So that's really, what we like to focus on. Yeah, I get it, Caddy. That's why I'm listing some catalysts that can make the probability of a correction greater than a coin toss. Yeah, true. And again, even if you do list out catalyst, we just don't know how the markets will react to those catalysts. And that's another thing that's kind of makes the market so interesting, so fascinating, is, as I've said this before, that even if you have the newspaper from 1 year from now, even if you know what's going to be the front page of 1 year from now, on the newspaper, you still don't know how the market's going to react. And that's what's interesting. Even if you do know what the Federal Reserve's decision is going to be, even if you do know how the earnings are going to come out, we still don't know how the stock or the market's going to react. And that's the interesting piece. There's a lot of unknowns. And so winning this game over the long term, that's why it is so difficult, because you're dealing with a lot of unknowns in the market. So, all right. So yeah, Tesla here, 384,000 deliveries coming in for second quarter 2025. And that is a decline of about 12 to 13% on a year-over-year basis compared to 444,000 same time last year. However, this is still all about perception, and if I told you like, okay, Tesla is going to report deliveries, it's going to see a decline of 13% year over year, initial reaction would be, oh, okay, 13% decline year over year. Tesla is coming in below expectations. Stock should probably be lower. But guess what? It is all about perspective. It is not as bad as what investors are expecting it to be. And as a result, the stock is higher, 4.8, almost 5%. And that's why markets can, throw you curveballs every single day. So non-farm payrolls coming out tomorrow. That's going to be important, as well as the PMI numbers, manufacturing, services, manufacturing, all that stuff. Joel's numbers came in at 7.7 million. I'm going to plug this number into my spreadsheet tomorrow to see where the equilibrium now sits for job openings versus unemployed persons. And we'll take a look at the overall labor market. Now, the Federal Reserve is, once again, not interested in cutting interest rates right now because they want to see how the impact of these tariffs are going to be on inflation. So the Federal Reserve Chairman Jerome Powell said Tuesday the central bank would have cut rates by now if it wasn't for Trump's broad tariffs. So speaking at the European Central Bank Forum in Portugal, Powell said the Fed went on hold when we saw the size of the tariffs, and essentially all inflation forecast for the U.S. went up materially as a consequence of these tariffs. And the central bank has held its key borrowing rates steady in a range of 4.25% and 4.5% since December. So last year we got 100 basis points worth of cuts, which in my opinion was a little too much too fast. And this year we haven't seen anything. No cuts, no raises. We've actually been where we are, and the economy has just chugged along at these pretty strong growth rates. Unemployment's been pretty low, so that's good. And the stock market is back at all-time highs. So what we're really seeing is a market that is very, very strong, I would say. Apple's still struggling a little bit, but of course, Nvidia, Microsoft, Google, Meta platforms, all of them have really, put this market back up to new all-time highs as of course, the market breadth also improves. We now have 59% of stocks trading above their 200-day moving average, and almost 80% of stocks trading above their 50-day moving average, and 82% of stocks are trading above their 20-day moving average. So this, of course, has also been a very important indicator for us. Very, very simple, yet powerful and useful indicator that tells us about market breadth and the strength of this rally. And so far, it's been pretty strong, given where we are. Okay, let's see. It's always a coin toss. Why is Tesla up? So we just got the numbers for deliveries for second quarter. Amir says, very true. I work at Tesla. I knew the delivery numbers, but wasn't expecting Tesla to rise after this. I even sold some of my RSUs. Yep. So that's the beauty of the market, right? That's what makes it fascinating. How the market's going to react is the unknown for everybody. So that's why it's impossible to predict and quite useless to try to predict also. But one thing I will say is that if you always predict the markets are going to go up, you will come out right and you will come out ahead more times than if you constantly predict the market's going to correct and crash. Because anybody want to take a guess on why that is? Like why that would be the case? Like if I come out here on YouTube, right? And I tell you every single day, oh, the market's going to go up. Oh, the market's going to go up. Oh, I'm going to be right more times, way more times than I'm going to be wrong. And why that is? Why is that? Why is that? I mean, I kind of gave the answer away a little bit, but why do you think that is? So, because stonks only go up, right? But no, in all seriousness, looking at historical data, looking at a lot of years worth of analysis, 72% of the times markets have gone up, 28% of times, and these are yearly stats. So 72% in the last 100 years, 72 years, we've actually gone up, 28 years, we've actually gone down. So the probability is very much in the favor of bulls over the long term. And as a result, if you are bullish, you're going to come out ahead statistically. More times you're going to be right than wrong. So, stonks only go up. Yes. Market has always gone up, right? So, but however, we cannot judge the future purely based on the past. And that's one thing that I have to always remind investors is that, okay, just because it's happened in the past, we can be the best at looking at statistics and history and data. But things do change. Things shift. Things change quite often. And that's what we have to be very much aware of, that just because it's happened in the past, just because it's worked out in the past, doesn't mean it's going to work out forever. So, okay, because USA printing money, yeah, that also. So coming over to the position. So again, this is the portfolio. We'll do some updates and alerts on this. The bottom line is I'll be closing out TSLL puts. I'll be closing out my NVIDIA covered calls. I'll be closing out my HIMS covered calls. I'll be closing out maybe my SoFi covered calls depending on how much they're higher. And then Tesla, my 300 call is now back in the money. It was actually out of the money up until yesterday. We're now back in the money, but of course the expiration's way out into the future. So I can't really do much there. But we'll see what else I can do with this portfolio. So we'll send out all the alerts. And I do want to mention to everyone, the 4th of July sale is here. So if you've ever wanted to join our community, get real-time trade alerts, members-only videos, as well as the options course, link's going to be down below if you're interested in joining us. So that is the 40% off on annual memberships. For just $30 a month, you get access to everything, including the options course. And I added 2 more tutorials on credit spreads and iron condors. Those are brand new tutorials, 30 minutes long, full breakdowns and explanations of how those strategies work and how you can actually trade them. So that's available. And if you have any questions, any hesitations, anything you want to have clarity on, email me. I'm more than happy to set up a quick Zoom call. You'll be speaking with me personally, no other person. My email is admin@moneyvest.com. Email me and I'm more than happy to set up a quick Zoom call if you have any questions whatsoever. My goal really is to get this options course, psychology of investing, fundamentals, technicals, really just educate as many people as possible, right? So try to help as many people as possible. And so I will make myself available and free for you if you have any questions. My goal is really just to help and answer any questions. So anything comes up, just email me, set up a Zoom call, get in touch with me, and I'm more than happy to help. So that's the whole idea. All right, capital preservation, rule number 1. I agree, worth buying NVIDIA, holding long term. So great question. However, I would be a little bit more careful on NVIDIA because it's already almost at a $4 trillion market cap, right? So how much more upside does it really have? And I was having this discussion with one of our other members and, we were really talking about opportunity cost, right? So if you buy NVIDIA today when it's already at a $4 trillion market cap, and let's say that 5-year or 7-year, the plan or the focus is growth, aggressive growth, and I want to, let's say, double my investment, right? Or 100% increase, right? I want to 2x my investment in whatever capital I invest that money in. Now, what is easier to do, right? What do you think is going to be a lot more easy over the next 5, say 7 years? NVIDIA going from $4 trillion to $8 trillion market cap, that's a 100% return, or a stock like, I don't know, HIMS going from 30 or 40 billion, whatever it's trading at, 10 billion actually. HIMS is at 10 billion. So 10 to 20 billion market cap, right? Or Palantir going from 300 billion to 600 billion. Or any other sort of growth stock that you look at, right? What's going to be easier to do? Is it going to be for these companies to perform and if they continue to execute, go up to 100% gain? Because both scenarios is 100% return. It's going to be the same exact return in terms of percentages. And I would argue going from $4 to $8 trillion for NVIDIA is going to be significantly more challenging than it is for HIMS to go from 10 to 20 billion, or Palantir to go from 300 to 600 billion, or any other stock that we can look at. Like, for example, Robinhood has been on an absolute tear. This thing's getting up to over 81 billion, right? I mean, it's literally April 7th to now, the stock's up 222%. Who would have thought, right? Absolutely insane momentum. It's now more than tripled from its April 7th lows, not August, not 2023, April 7th of this year. That entire tariff tantrum, $30 to $95. So huge congratulations. I mean, I know a lot of people in our community are actually holding on to Robinhood. Like they've gone up like 10 times their investment. But this is wild stuff, you know. Robinhood, 222% since April 7th is crazy. So yeah, that's going to be my quick thoughts on NVIDIA and where it's trading at right now. I still love the company, of course. I'm still holding on to it. So Kevin, man, I would love to join the community, but Fidelity isn't letting me trade options yet. So I think you have to just take a quick sort of, you know, survey or like a questionnaire, answer some questions, and you can activate level 1 or level 2 trading levels, options trading levels. And you know, I definitely do suggest that you start with the most basic strategies, the very, very simple and more basic strategies. And that is covered calls and cash secured puts and leaps and poor man covered calls. And that's, you know, your level 1, that's your beginner strategies that are very useful. But then of course you can, as you progress in your trading journey, you can also go into the more advanced strategies like iron condors, credit spreads, which are also verticals, straddles. So we only, you know, look at short straddles, and we only look at credit spreads, not debit spreads, and as well as iron condors to generate premium income, right? That's what we like to focus on. And then of course, callers and protective callers, zero cost callers, protective puts, all those things kind of come into play. So again, more than happy to help you with all of this. Just email me, message me, and I am available. Can I ask you to do a quick technical analysis on AppLovin? Just curious, the levels you see, support, resistance. Thanks. Sure. So let me just go over that very quickly. APP, and we're gonna go over the weekly time frame. So, okay, looks like I have something here with a very nice uptrend, higher highs and higher lows. And the next support I would mark out, of course, is gonna be right about there at 198. So that would be a level to watch, as well as a more intermediate support right here at $303. So you seem to be kind of bouncing off of that level here a couple times. So really it would be a bit of a range instead of just a pure support. It would be like a range here that I would mark out as an area of support for AppLovin. Resistance is going to stay put right about here. That's very clear. It seems to be getting rejected there a couple times. Now, I will say this, there seems to be a little bit of a bear flag formation here, where you can clearly see the price sort of moving sideways in consolidation here. And of course, we saw a pretty brutal sell-off right there. So if we do get another breakdown, support level $306, $305, in case we get a longer, bigger breakdown, $200 also a possibility. So that would be a potential bear flag with an initial support down at $305, $306. So, do you invest in Google? Do you think at the current PE and moat, it's a good time to buy? Thank you. So, Google, I don't personally have right now, but I think long term it's gonna be good. It's gonna be a good long term play, and you know, for me, I look at things in terms of opportunity cost as well. And like I said in my yesterday's update, that there's nothing wrong with a lot of the already established and good companies that have done really well with strong moats. But as they get larger and larger, right, how much more upside do we really have? I mean, yes, Google is at $2 trillion, and you know, it can get up to $3 trillion or $4 trillion. That's a good 50 to 100% return. But you know, you can again go back to the same question: is what is easier? What is easier for a company to do, right? For HIMS, Palantir, for these companies to double, or for Google and for NVIDIA to add on another couple of trillion or $4 trillion in NVIDIA's case to give us the same return. So I love these companies. I think they're very strong. Moat is still very good. They're continuing to expand their businesses, and the returns will be there. It just comes down to the opportunity cost, right? Would you rather stick your capital in Google and get good returns, or you would find something that's a little bit more aggressive, more growth, and get great returns or even better returns? So that's what it comes down to. And I like Google, right, for the long term. So Zach, why does market cap alone matter? Shouldn't we look at the fundamentals? Nobody expected NVIDIA to be close to 4 trillion market cap, and here we are. That's true. And you know, the market cap, the reason why we look at market cap is because at the end of the day, market cap is the value of the company, right? And 4 trillion, Nvidia is doing pretty well at 30, 35 times earnings multiple. And if it were to double from here, so $8 trillion, is the market large enough for Nvidia to capture that much revenue, that much earnings, to be able to justify that level of valuation? That's the real question. And then there are some things that also are more logistical, like where's the next $4 trillion going to come from? Because now we're talking in trillions. Up until 2018, we did not have even one company that was $1 trillion market cap. And now we have like 5 of them. It might even be more, like Tesla, Meta, Nvidia, Google, Microsoft. And I think Broadcom is also $1 trillion market cap, if I'm not mistaken. Visa is getting up there, so Broadcom is 1.25. So I mean, there's actually multiple stocks now that are worth multiple trillions. So is the market large enough to justify these valuations? That's the real question that it all comes down to. And I know 8 trillion seems a bit crazy. It is obviously possible. Anything is possible, but it is at the end of the day, it is a pretty large number to wrap your head around it, So, yeah, nailed it. Fidelity is easy to get options added. They do access at the account level, ask for income, experience, etc. All that stuff. Yes. UNH. Let me just take a quick look before the markets open here. By the way, markets just open. So, support level for UNH is going to stay put at 290. So 290 closer to $300, and we still have a little bit of a gap to fill on UNH from 342 all the way up to as much as 376 for UNH. So, of course, brutal sell-off. But we're seeing a little bit of that recovery. Okay, markets are open. Tesla giving back on some of those gains after we got the delivery numbers, but we are still up over 2.7, 2.8%. Nvidia also pushing up back over 153. SoFi is higher, 1763. So portfolio right now is sitting at just over $1,000 on the day, just under $50,000 in open P&L, and of course 57,000 on year-to-date gains here. So that's where we are. And of course, the MoneyVest Index at 3.91. So thank you so much for joining, everyone. I really appreciate it. I'm going to jump into our Discord. I'm going to put on my headphones, put on some music. That's what I like to do for the first couple hours. And we'll send out all the trading alerts and Discord updates in our Discord. And like I said, if you want to join, be a part of our MoneyVest community, link's going to be down below. There is, like I said, a 40% discount on an annual basis for 4th of July. And if you have any questions, like I said, these are free Zoom calls. 5 minutes with me. You can jump on a Zoom call. I can answer all your questions. Just email me at admin@moneyvest.com and you'll connect with me. We'll get on a Zoom call. I'll answer all your questions. And then you can decide if you want to join, be a part of our community. If not, that's totally fine. All I really want to do is help you in your journey. So that's what I'm here to do, is help as many people as possible. So thank you so much. Happy investing to all, and I will see you all in the next